All right, what we got going on? How's everybody doing? The world is crazy. It's falling apart, but we're still here. We're not going anywhere. And I think at the end of the day, we go through these ebbs and flows, these ups and downs, just like the market. And what we're seeing right now is a swing of destabilization. There's an argument you could make for why it may have been necessary for the plans that have been put in place in the long term. I don't want to go too far down the rabbit hole, but if you understand how transitions are made in societies, you have to tear down old structures to make way for new ones. So I'll leave you with that. I want to read from a rule from Jankowski's Trading Rules at Work, and then I want to take a look at Bitcoin and talk a little bit about FOMO tonight, because I've had a lot of people, especially beginner traders, asking me, and some not beginners, asking me, should I have bought? Should I buy now? Am I going to miss something? So we'll take a look at that. Excuse me. But tonight, hopefully I didn't blow anyone's ears out, we're going to look at rule number 16. And it's going to tie into our little lesson here with Bitcoin. Trade with the trend. And the little quote here, one of Scott's favorites, the trend is your friend. And Scott would add, till it bends. So we're going to look at the trend right now. We're going to look, is it bending? Because if it's not bending, it's still our friend. He says, anyone who has traded for more than one day in his life knows this rule. As a factor in managing risk to reward ratio and playing it smart, most traders attempt to trade with the trend currently in progress. Identifying a trend in progress is rather easy. If we set aside all other parts of the trading approach, things like how to get positioned properly, limiting losses, adding to a winner, and so on, and focus on just this one rule for a moment, we have only one thing we need to be concerned with: the direction or trend of the market. Now, there's three directions a market can trend. Can anybody name one, two, or all three directions or trends that exist in a market? Up, down, side. Nova, right on the money. Paul, but you guys know. I'm just throwing it out there. Maybe someone who's listening to the recording doesn't know us that well. If you've been here for a while, you know. You can go up, you can go down, you can go sideways. Stuart, inside. So what is a trend? Well, a trend... nice taco. Up, up, down, down, left, right, A, B, select. We just went into God mode. A trend is when the imbalance in a market is moving consistently, or when the market is in perfect balance. So if a market is moving up or down, you have an imbalance that is taking place, and we call that decompression. The market is moving towards where it wants to go. When you get stuck moving sideways, you're in a range. The market is in balance. Orders are compressing inside of the range. More and more orders piling in and out. The market is deciding which way to go, or it's building up speed to continue the trend. So when we get into a sideways move, it becomes our job to decide, is the market just kind of taking a break in the bigger picture trend? Or is the market deciding that it might be running out of steam? Maybe it's time to make a turn. Okay, so making this rule works for you requires a willingness to identify what's already happening. So you have to know what's happening in the market to answer this question. Which way is it trending, or should I get in with the trend? So you also need to decide whether your methodology will work for that kind of trend. So is your trade plan going to work with the trend you're in? Some systemized approaches or technical methods are trend followers. Some are breakout or momentum identifiers. Breakout or momentum approaches are not good for initiating positions with an existing up or downtrend. Let me read that again. That is a very good piece of gold nugget information that a lot of beginning traders do not understand until they experience it. Breakout or momentum approaches are not good for initiating positions with an existing up or downtrend. So if we are in an uptrend and we go into a sideways move, why would you trade a momentum approach by opening a position into that breakout unless you know the big picture And unless you've positioned yourself well inside of that range, it doesn't make sense to try and use a momentum approach, because momentum has already been, the moment you have made the breakout from the bottom or the turn, everything else is a continuation. So if you want a breakout trade, you want to trade when you're making the reversal and you're breaking out of a pattern or you're breaking an important level. You don't want to trade a breakout move in the middle of an uptrend. It doesn't make sense. So downtrend, same way, and then, ranges a little bit different. So let's talk about what he says here. He says, no matter which trend you choose to trade, the common sense psychology behind this rule is don't argue with the market. That's the key. You don't want to trade against the trend. That's arguing with the market. He talks about his figures there and what they show. And then he says, as a trader looking for long-term success, one of the important disciplines to learn is that the market is always right. The market clearly says what the prevailing trend is, and taking money from a market, no matter which trend is evident, does not require a lot of effort, study, or work. It requires discipline. Once you're in position with the trend, there's nothing to do but add to the position as the trend continues. Regardless of your initial objective for liquidation, if the trend remains in place and a further price advance is developing, there's nothing to do but add on a pullback and to the winning position and wait until the trend is over. When you get into a bullish move and you get a pullback, you add, you buy the dip, you add if the trend is showing strength to continue. If they pull back to the trend line, they bounce off it slightly, you can add there in a bullish uptrend. If you're in a downtrend, why are you adding to your loser? Dollar cost average. I hear all the people shouting it from the crypto streets of Facebook. Dollar cost average. If you dollar cost average all of your capital that's available and the market goes down further, what are you going to do? You're out of tools. You're the Fed and you just lowered the interest rate to 0. What are you going to do? Well, you're going to go negative and you're going to sell part of your position hoping you can dollar cost average lower. You're going to take a loss and you're going to hurt your initial capital. Dollar cost average does not make sense when you are in the middle of a downtrend move. Now, if you're scaling in at a support level, if you're in an uptrend and a pullback, maybe you dollar cost average because you bought in too early and it gives you a stronger pullback to a moving average with support, maybe. But dollar cost averaging, it comes from a different market, a different type of setup, and it makes no sense on Bitcoin when you're in a downtrend, at least not to me. So an uptrend we already talked about. I don't want to spend too much more time on this. Downtrend range we talked about. He talks about the benefits of clearly appraising the trend. And then this last little bit I wanted to make sure I hit, and then we'll take a look at the chart and pass it back to Scott for the last about 10, 15 minutes. He says the important thing to remember about this rule is that each of the 3 potential trends has available unique characteristics. Developing a solid trading method is all about fitting your trading approach into the most comfortable kind of trend for you, or developing an approach you can use successfully for any kind of trend. I would push back on that with that kind of comment. I personally have worked with traders who, after learning enough about the market psychology and their personal psychology, have decided to only trade one kind of trend rather than try to trade all potential price action. As a matter of fact, the highest performers have always been short sellers working in downtrends or the sell side of ranges. What do you know about that? Well, one of the things that I'll always like to keep in mind is that your selling percentages are different from your buying percentages, and that comes into play. Let me move over here real quick when we start talking about these drops and these bounces. So here's our Bitcoin chart. Our job is to answer the question, did I miss anything? Should I buy? And this is what I think a lot of beginners will look at. They'll look at a Bitcoin chart like this. They'll think, whoa, I came from all the way back up here. Look how far we've come up. I've been waiting. Oh, we got a huge drop. Risk is lowered. Do I buy here? Shoot, I really should have gotten in at 3,000. You know what? I'm going to wait. It's going to come lower. Ooh, it hit 44. It made a lower low. Ooh, did I wait too long? Should I buy? Oh, I waited too long. I should have bought. This is what a lot of beginners go through. And then they have remorse, buyer's remorse. So then they're going to buy up here. They're going to buy in this move right here. Well, if you're lucky, maybe we come up to about where the drop came from and we close this little space here, so to speak. I don't know if you'll really get that because looking left, this was where a lot of that sideways already compressed. We already decompressed that area over here. So I don't know if you can count a whole lot on that. What I do know is I can take a look at the volume and get some clues. Even on the lower time frame, here's a lot of selling pushing down into the move. We supported that. And then as we started to bounce, we got some good buying volume, but what happened? Disappeared. When did the volume come back? When they sold some more. Okay. Where's the volume rising and falling here? The volume rises into the sell, supports the sell side. The volume peaks in the buy. So some people would think, hey, maybe this is like smart money getting positioned here. Well, take a peek lower, see what you see. If that was smart money, why did they wait to put all this buying in halfway through that push up? Why weren't they waiting here to shark this entry? Questions you should ask yourself. Go back to the 1 hour. They really like to cleverly hide some of these things to trick us, but if we really identify with a vertical line where that volume is, it is not in the smartest place in that leg. So I don't like that. That doesn't make me think super smart or manipulator knowing what's going on. Now let's go to the end of this little move here. What do we see? Press this down a little bit. Peak, fall of volume. Where does it point? Again, if you were getting ready to break out of something, let's see if I can move this over here. I can kind of almost see that beginners who don't know a lot about crypto, who are just looking for kind of a pattern in their brain to make sense, I'm sure a lot of people are doing something like that. And they say, look at that, that's a symmetrical triangle, and I got a breakout. Did you though? Is that the kind of volume that supports a breakout? What happened here in this area? That's a whole nother study in itself. I don't want to get too deep in that. At the end of the day, my job is to look for things that support my ideas and things that prove me wrong. I should have just went like this. So besides the fact that the volume's heavy on the sell side, I can go over here and look at the shorts. I see the shorts are still, they've still got a little bit of room to fall. So maybe there's a little bit of support to the idea they might do a short squeeze. What about the halving? 53 days away. Maybe there's a fundamental reason that'll push this up higher. Maybe we've bounced off these moving averages. Let's zoom out. What do I see when I zoom out? Let me even get this a little bit better here. I see volume pushing up into the drop, and then I see volume backing off as I do basically a sideways move. And you could even go like this and argue that it's, I can't draw a straight line very well, and I know you can shift it, so I can shift it when I do that. Is it like that? Is it like that? Who knows? I mean, that's not a breakout. Look where they paused. They came back up. They tapped it. To me, that's a sideways move. We're in a classic sideways move when we pushed to the top of it, and we didn't have much to really break through. But we're sitting there, and maybe we're sitting there because we want to come back up in here and square this up. Everybody's looking at that. Okay, I get that. But here's my question to you. If I zoom out, does that look bullish? I mean, we had this tremendous volume come up out of nowhere, kind of built into it a little bit. That's what my brain immediately sees. And if my brain sees that, then what I'm expecting to see is something like that. And what do you know? If they broke out of that right there, where's that going to put us? That's pretty close to Scott's looking for 28 there. I could see that pretty easily from that kind of a movement. And you could even almost make a case that some people will say that was like a swing low. We broke it and we hooked it. But when in doubt, here's what I do. Oof. All the way out to the weekly. And I'm going to do something real fun. I'm going to do a regression trend. Those of you that know what this is, it's looking for the average in between a range and the upper and lower standard deviation from that average. When you do a regression, what do you see? Well, you see that we hit the lower boundary of a standard deviation away from the average, which is pretty in line with what we had done on this downswing channel. We hit it so hard that we swung back up to get back inside, and it was a significant move. And we bounced right in that area. Does that mean that we're done going down? And if I look at the weekly volume, all this selling, if this was the turn, what do you have to support that? I mean, look at this. This was when smart money got in for a big run. That was where the volume peaked. Then the run happened. I don't see anything like that here. If we were going to do this, where's that? Where's the smart money getting in its spots to get going? For me, and Scott, I'm almost done, and then it's all you.
I'm listening. I'm scrolling.
Until this changes, this is my trend, quote unquote, my trend in crypto. It's hard to find a trend, and they're arguable and they're sloppy. Until they break out of this with volume, nothing's changed. We're not bullish. All we did in the big picture was make a little bounce off kind of the lower end, the lower deviation away from my average of this move. Nothing about this candle is bullish. It's not engulfing. There's no inverted hammer. There's no kind of candle pattern to support that thesis. The only reason why you would buy right now is because you are spending too much time zoomed in on a low time frame. You want to get to 2,800 tomorrow. You need to trade your money tomorrow to make $1 million because you want to be rich, and it's not going there fast enough, and now it's getting away from you. And if you don't get in now, it's going to be too late. You're in a hurry. That's fear, and you have a fear of missing out on something, and that's exactly where they want you. If you are feeling like stressed about not pushing the button, you have fallen for the trap. You're already too far in. There should be no feeling of discomfort when you put on a trade. And I'm going to take it a step further for you guys tonight because I spent a lot of time thinking about this. Conversely, what that means logically is you should have no stress sitting in a weight trade. Think about what that means. Think about it. Because every time you're not trading, you're doing the opposite. You're in a weight trade. You're still trading when you're sitting in cash. You're trading that you're sitting in USD or you're sitting in your GBP or your AUD. That's still a trade. Even when you don't click the button to shift to the other side, you're still sitting in the base of the pair. So if you have no Bitcoin right now, you're in a weight trade. And if you're not comfortable in the weight trade, guess what you did wrong? You didn't plan your weight trade properly. So you're stressed because you don't have a plan to wait. You got impatient. You're worried about missing something. And you're so worried, you're ignoring that all the signs on this move are telling you to sit your butt back and watch what happens. There is nothing on that chart that says click the button, you're going to miss out. And I will say that with conviction. I will challenge anyone to prove me wrong. You might get a bounce. We all know it. There's a chance that they go all the way up to that top of that channel. Sorry, Scott. I know you're there.
I'm scrolling.
I'm having a little bit of fun tonight.
It's the end of the week. I'm good. I think everybody's good listening.
There is. That's the monthly. Let me go back down the weekly and see what that looks like. Okay, it's still pretty close, even the monthly to the weekly. So maybe let's say they give you a rocket of a move and come right back up the top of the channel. Whew, you might get 70%. All right, cool. What happens when they do this to you after you enter? You make more money on a weight trade than you ever make putting your money into a market out of fear. If you have any feeling of fear at all of missing out, wait. If you're not comfortable, wait. I'm not a money manager. I'm not telling you not to do something with your money unless it's got to be your choice. But I'm telling you that every time that I was afraid and clicked the button myself, I lost money. And it wasn't until I got to the point where I recognized that I had to be just as comfortable waiting as I was trading before I realized that being comfortable with my trade plans means nothing if I can't sit and wait for the time when risk to reward is properly in place for me to execute. If I can't wait for the fundamentals of the world to settle down enough for me to even be emotionally capable of executing in such a volatile situation, excuse me. We've all got a lot going on in our lives right now. And unless you planned to buy Bitcoin at 3,800 and catch a 50% bounce, you didn't miss a damn thing. Now I owe money to Swear Jar. Unless that was your plan and you didn't click the button on your plan, you missed nothing. All you did was watch them bounce off the bottom of a deviation away from an average. And arguably there's an important level there support-wise.